that this is one of a series of seminars that we hope to roll out now over the coming months. I know obviously that the ongoing uncertainty of the situation will be causing all sorts of ongoing challenges, you know, so we're keen to support you and provide as much certainty as we can through such seminars. So thank you so much to you, first of all, for your attendance. It's getting into a busy time, so it's great that you can make the time for this, and we hope you find it really useful. I want to say huge thanks to our colleagues in revenue. You have been incredibly helpful to all our colleagues in the sector and have adapted enormously to all the changes that have been wrought. And the wage subsidy scheme has, you know, literally been a lifesaver for the organisations in our arts landscape. So what you provide today, I know, is going to be extremely useful to people in terms of how they're going to adapt now. And as I say, it's been an enormous help, something that obviously we hope that the government will be able to extend as long as possible, because it really has been a lifeline for the sector. So thanks so much to you for all the incredible cooperation. I guess if COVID has told us anything, it is that the interdependence, interconnectedness of all these sectors of Irish society are absolutely invaluable, and that kind of cohesion across all sectors has been enormously valuable. So we really are grateful to you and want to acknowledge all the brilliant work that you have done and that I know is ahead of you as well. So thanks all. I want to hand back to you now.
Thanks a million, Maureen. So to get the session underway, I'm going to hand over to Siobhan, who is going to bring you to a presentation on the EWSS.
Thank you, Maureen and Alwyn. Firstly, I'm actually going to take my video off just so the bandwidth holds up here. So just bear with me 1 second. Now. So good morning, everyone, and thank you very much to the Arts Council for allowing us to use this platform to get the end of the TWSS and EWSS information out there to your members. So I'm going to give you a brief reminder of some of the closing stages of TWSS that are going to continue after the 31st of August, as employers will still be availing of the scheme until then. And I'm going to talk you through the highlight and main aspects, I suppose, of the EWSS scheme. So just firstly, I'm going to give you some stats on the temporary wage subsidy scheme. So as of the 27th of August, the statistics published on the Revenue website were that 69,500 employers have registered for TWSS with 66,200 receiving payments, with 659,500 employees availing of the support under TWSS, paying out 2.736 billion, including tax refunds of around 151 million. So just moving forward with the temporary wage subsidy scheme, I'm going to go through how employers stop operating the scheme, compliance check program, the end of year review, and reconciliation. So for employers, how employers stop operating the scheme. So employers have had the option at any point of TWSS to stop operating the scheme, and this was done by them simply stop making J9 submissions and returning all employees to normal PRSI class. Payments under the TWSS are paid to employers on a pay date basis, not an earned basis. So on the closing of the TWSS, which is today, Revenue will no longer accept J9 PRSI class payroll submissions unless this is the normal and correct PRSI class for employees. Payroll submissions received with pay dates up to and including the 31st of August will be processed for subsidy under TWSS for eligible employers in relation to eligible employees, and payroll submissions received with pay dates on and from the 1st of September 2020 will be processed for subsidy under EWSS for eligible employers in relation to eligible employees for whom the subsidy is payable. Effectively, that means that pay dates will determine the eligibility for either TWSS or EWSS. The employer must retain all records for the operation of the TWSS, including subsidy payments to employees. This will be very important as we move into the reconciliation phase, and employers operating TWSS will be included in the reconciliation phase, and a list of employers will be published on revenue.ie at the end of the scheme. So moving on to the compliance check programme. So to ensure the TWSS was operated correctly, Revenue is conducting a programme of compliance checks on all employers who availed of the scheme at any stage, not just those currently availing of it. Letters are issuing to employers and their agents where relevant, mainly through the My Inquiries inbox. Revenue teams are working these cases in batches. So if employers have not received anything yet, keep an eye on that inbox for correspondence, as there is a turnaround time on these letters. So it is essential that employers respond promptly, as failure to do so may lead to suspension of future payments. Just make contact with the caseworker and inform them that you are working to get relevant information to them, and just keep the lines of communication open with Revenue. So the letters are to confirm that the employer has met the eligibility criteria, so they will be asked for details of business activities, the negative impact suffered. If the business was closed, they will be asked to provide the date of closure or date of disruption. And if they were unable to pay normal wages or outgoings, they may be asked to provide financial details to support this, and also details and evidence of the basis for meeting the reduction in 25% turnover test. So the check also ensures that employees have received the correct amount of subsidy and that it is being recorded on the employee pay slips. So they'll be asked for evidence to support this, which will include a sample of copies of pay slips. The compliance check is not part of an audit or intervention. The contact is a request for information to provide assurance that the scheme has been operated as intended by employers. In addition, the compliance check programme will address any issues identified in respect of the operation excuse me, of real-time PAYE or PMOD by employers over 2019 and 2020, and will provide an opportunity for employers to address any other outstanding tax issues they may have. This will be of importance to employers who may intend to avail of the debt warehousing scheme for employer PAYE and VAT liabilities that were incurred during the pandemic period, as up-to-date compliance will be a prerequisite in order to avail of that scheme. To date, we've had a positive response to this programme, with most employers responding within the required time and providing the requested documentation. Again, it is important to keep an eye on the My Inquiries inbox for that correspondence if you have not received the letter yet, and just to make contact with the caseworker when you do receive the letter, and you should get a notification in the inbox stating that the check has been completed. So moving on to the reconciliation, this is currently in development and testing phase, and further guidance is available on the TWSS FAQ document. Essentially, Revenue will reconcile each employer who operated the TWSS on all refunds paid to the employer against the amount of subsidy payable to each employee per pay date. So as you might remember, back in March, the employer refund scheme was launched, and then the temporary wage subsidy scheme was launched. Revenue refunded the maximum amount of subsidy of €410 per employee to employers, regardless of the subsidy that was paid. And as we moved into the operational phase on the 4th of May, Revenue provided all the necessary details regarding employee subsidy amounts to employers on a CSV file to ensure the correct amount of subsidy was paid to the employee and refunded to the employer. So this gives rise to the requirement for a reconciliation of those balances from the transitional to the operational phase. So the reconciliation process has two stages. Stage one, employers are required to report the actual subsidy paid to their employees for each pay date by the end of October 2020. And stage two, Revenue will determine the amount of TWSS, if any, owing back to Revenue from employers. And each active pay slip will be reconciled. This stage is due to commence in October 2020. So during the reconciliation, all active pay slips will be examined and the subsidy payable amount for each will be determined. The sum of subsidy payable amounts will be compared against the cumulative refunds paid to the employer and a statement of account. So as previously mentioned, as part of the reconciliation process, the employer will report the subsidy paid amount to Revenue. This is the amount actually paid by the employer to the employee in terms of subsidy. The reconciliation will calculate the subsidy payable. This is a subsidy the employee is due based on the rules of the scheme as set out in Section 28 of the Emergency Measures in the Public Interest, the COVID-19 Act 2020, and the subsequent determination by the Minister for Finance on the 16th of April when the scope of the scheme was expanded. So the calculation will then look at subsidy paid as reported by the employer, subsidy payable as calculated by revenue, and a third category, caseworker resolved. And this is where a caseworker manually calculated the subsidy due on a payslip based on the rules of the scheme, as well as additional information provided by the employer. So there are options for the employer to report the subsidy paid under both the TWSS and the employer refund scheme, and they can be reported through either direct reporting through payroll. So many of payroll software packages allow the employer to include the subsidy payment information as part of the payroll submission. Employers will need to check with their payroll provider to determine the dates from which the payroll software was capable of reporting subsidy payments and ensure that all subsidy payments are reported before commencing reconciliation. Employers can make such subsidy paid submissions now. Second option, excuse me, the second option is the CSV upload available in ROS. Some of the payroll software packages will generate a subsidy paid file for the employer to upload to ROS to report the subsidy paid. And employers wishing to use the subsidy paid CSV file upload can upload the prescribed format CSV file containing the subsidy paid details. And this feature should be available in ROS in late September. And the third option, revenue payroll reporting in ROS. So the employer can report the subsidy paid by manually reporting the payroll notification in ROS. The employer can access payroll reporting in ROS and report the subsidy paid by including an amount in the other payments field. This feature is currently available. It can be useful for employers with a small number of employees. So once the employer has provided the subsidy paid amounts for all active pay slips, this will trigger the reconciliation process, and it's envisaged that the reconciliation calculation will be available in October. There are detailed instructions in the TWSS employer FAQ document. I know there's a lot of information there. So if you just go to the FAQ document for the TWSS, you will find all that information. And just a final point to note, so for employers making refunds of TWSS back to revenue, there is a new RevPay facility available. Employers are requested to no longer use the bank details or EFT method as previously advised, but ensure that only amounts of temporary wage subsidy scheme payments are repaid to revenue and do not include any payments in respect of income tax or USC refunded. And any repayment of income tax or USC should be separately paid under PAYE EMP to ensure the payment is correctly reflected in the employer's PAYE EMP balance. So just moving on to the end of year. So the TWSS payments are liable to income tax and universal social charge, the USC, and the pandemic unemployment payment, the PUP, is liable to income tax. These are not or have not been taxed in real time through the normal PAYE system, but they will be liable for tax and USC by way of an end of year review for the employee. So when this end of year review is carried out, should an income tax liability arise, it is normal revenue practice to collect any tax owing in manageable amounts for the employee. This is done by reducing an individual's tax credits for a future year or years in order to minimize any hardship. In this instance, reduction of credits will be from 2022 and may continue to 2026 depending on the circumstances of the employee. If an employee wants to make a payment to revenue, they can also do that. And additionally, an individual may have tax credits to claim in respect of the 2020 tax year, for example, health expenses, which can be used to offset any possible liability. So when the continuation of the TWSS was announced to the end of August 2020, in order to further minimise that liability at the end of the year, Revenue placed all employees that received payments under either the TWSS or the PUP on a non-cumulative week one basis, and this was a further attempt to minimise the liability or hardship for employees. So employees on TWSS placed on a week one will continue on a week one basis until the year end, and employees not previously on TWSS, where their employer is joining EWSS, will be taxed as normal in real time. And I'll talk to you a little bit more about that later. So now moving on to the Employment Wage Subsidy Scheme, the EWSS. So I just want to go through the transitioning from TWSS to EWSS. So as I mentioned, TWSS will expire today and no new employers have been able to join the scheme since the 31st of July, but current employers availing of it will be able to continue with the TWSS until today. So the EWSS, as announced by government on the 23rd of July, will effectively replace the TWSS from the 1st of September 2020 and will continue until the 31st of March 2021. However, as both schemes have run in parallel from the 1st of July 2020 until the TWSS ceases, as employers who were not eligible for TWSS or who had employees not eligible for TWSS can claim EWSS in respect of these employees from the 1st of July. This will be dealt with as part of a sweepback mechanism, which is currently under development, with proposal for payment of those cases being made in mid-September. And just a really important note, employers must register for EWSS as it is completely separate to TWSS. And to date, over 16,450 employers have registered for the EWSS. So under EWSS, the employer will pay the employee their normal gross weekly wages. Revenue will pay the subsidy via EFT directly to the employer in respect of each eligible employee following submission of the normal payroll return. Legislation itself for the EWSS was signed into law on the 1st of August, and guidance material has been published on our website since the 14th of August. And it's important just to refer to this in the first instance to answer any queries that you may have, and it will be updated regularly with any changes. So it's worth keeping an eye on the guidance document. And I know there's the second version is in draft at the moment, so there should be new guidance or updated guidance coming this week. And as mentioned, Q4 2020 will see the reconciliation phase happen and the EWSS will cease at the end of March 2021. So I'm just going to talk you through the key features of EWSS. So seasonal and new hires are included and backdated to the 1st of July, as mentioned, subject to limited exceptions, with payments expected to be made by revenue in mid-September and then payments for subsequent periods being made monthly in arrears thereafter. So employer and employee eligibility and tax clearance. I'll talk to you more about this in the next few slides. Just one key point, employers must have tax clearance to register for EWSS. So for publication, as with the TWSS and in line with international practice, a list of employers availing of EWSS will be published in 2 tranches. So the first tranche will be January 2020, and then the second will be April 2021, and they will be published on revenue.ie. Registration went live on the 18th of August, and you can register through ROS on My Services page, click the Manage Tax Registrations in the Other Services section, and then click Register next to the EWSS. The subsidy is a flat rate based on the employee gross weekly pay, and I will talk you through these rates in a few moments as well. EWSS will be operated through the normal payroll and taxation systems, so employers will be required to operate payroll taxes in real time on all gross payments to be made to their employees. And in relation to the PRSI rate, while employers are required to report and pay the full rate of employer and employee PRSI on receipt of payroll submissions, revenue will apply a reduced rate of 0.5% in respect of employees for whom a subsidy is payable. Employer monthly liabilities will be revised accordingly, and any resulting PRSI credit will be available for offset against future employer liabilities. And there are safeguards to minimise abuse of the system, and I'll talk to you in a little bit more detail about that as well. So employer eligibility. To qualify, employers must be able to demonstrate to the satisfaction of revenue that their business has been significantly disrupted by reason of COVID-19, and they must demonstrate at least a 30% decline in either the turnover of the employer's business or in orders received during the period of the 1st of July 2020 to the 31st of December 2020 as compared to the same period in 2019. So in cases where the business of the employer has not operated for the whole of the corresponding period in 2019, the following will apply. Where the business operations have commenced on or before the 1st of November 2019, the 30% decline with tests must be determined in 2020 by reference to the same period in 2019 in which the business was in operation. Where the business has commenced after the 1st of November 2019, the employer must be able to show that the turnover or orders during the period of the 1st of July to the 31st of December 2020 will be at least 30% less than what the turnover or orders would have been had there been no disruption caused by COVID-19. And as I said earlier, employers must have tax clearance to be eligible to join EWSS and must continue to remain tax clear to receive the EWSS benefits. So in order to qualify for tax clearance, employers must be compliant with all obligations under tax legislation in relation to the filing of tax returns and payment of taxes. However, if you have filed all your tax returns but are not in a position to pay all your tax liabilities and have tax debts that cannot be warehoused under the COVID-19 debt warehousing scheme, you can still obtain tax clearance if you enter a phased payment arrangement, and this can be done through the Collector General's office. Where an employer files a payroll submission for EWSS but is not in possession of e-tax clearance, a warning will issue advising that the tax clearance is not in place, and hopefully this will provide adequate notice to the employer to regularise the position prior to the return due date, that date being the 14th of the following month, to ensure the employer gets the payment of the subsidy. So it's really important for employers to check their tax clearance, and you can check your tax clearance status in ROSS. After logging in, current tax clearance status is displayed in blue writing above the grey banner for My Frequently Used Services. And if an employer does not currently hold tax clearance, an application can be made online and assessed in real time through the ROSS e-tax clearance service by selecting Manage Tax Clearance under the Other Services section on the ROSS home screen and following the online instructions while selecting EWSS as the reason for tax clearance. So employers are also required to review the eligibility criteria at the end of each month from August 2020 to February 2021. And if as a result of the review at the end of each month, it transpires that the employer no longer qualifies, they should withdraw from the scheme on ROSS with effect from the first day of the following month and cease claiming the subsidy. So this review is to ensure that the projected turnover or order reduction of at least 30% for July to December 2020 remains valid and does not require adjustment based on actual trading results to date, together with other developments in the employer's business or the marketplace which may impact on projected turnover for the 6-month period. And if you do find yourself deregistering, employers can re-register if a review during the following months show that once again they expect a 30% reduction for July to December 2020. This registration cannot be backdated to encompass the period where the 30% reduction was not expected. So moving on to employee eligibility. So as mentioned, employee eligibility has been extended to seasonal workers and new hires, and they will be included in the sweepback facility to the 31st of July 2020. So childcare businesses registered in accordance with Section 58C of the Childcare Act 1991 are also included in the scheme. Non-TWSS employers or non-eligible TWSS employees are eligible from the 1st of July through that sweepback mechanism. Revenue will pay the subsidy in these circumstances as soon as practicable after the 14th of September. So where an employer registered for EWSS is making a claim for these cases, they will be required to provide employee information, including employee name, PPSN, employment IDs, electronically using a template which will be available on revenue.ie shortly. And once this information is received, Revenue will upload this information and calculate the total subsidy due to be paid. The subsidy will be paid into the designated bank account as soon as practicable after the 14th of September. There are no restrictions under the Transfer of Undertakings Protection of Employment, so the TUPE arrangements, provided such recruitments or movements are undertaken for bona fide business purposes and not with the intention to maximise subsidy claims. There are some restrictions and certain categories are excluded in the legislations, such as proprietary directors and connected parties. So in relation to proprietary directors, in recognition of the role played by certain proprietary directors in providing employment to others, especially in the SME sector, it has been agreed that EWSS can be claimed in respect of certain proprietary directors. This morning, Revenue confirmed that EWSS can be claimed in This morning, Revenue confirmed that EWSS can be claimed in respect of proprietary directors subject to the following conditions. So where the employer meets the eligibility criteria for EWSS, where the proprietary director is on the payroll of the eligible employer, and where the proprietary director has been paid wages which were reported to Revenue on the payroll of the eligible employer at any stage between the 1st of July 2019 and the 30th of June 2020. And detailed guidance and further conditions will be published shortly on revenue.ie. And then connected parties who were not on the payroll at any time between the 1st of July 2019 and the 30th of June 2020. So that would be brothers, sisters, aunts, uncles, nieces, nephews, etc. And they will also be included in the guidance document. Information on them will be included in the guidance document. So moving on to registration for EWSS. The registration for EWSS went live on the 18th of August, and the employer, their agent or payroll provider can register for EWSS. Registration is through Ross under the Manage My Registrations part, and there is a self-declaration to be made. Registration applications will only be processed if the employer is registered for PAYE PRSI as an employer and has a bank account linked to that registration, and that they have tax clearance. And it's important just to look into the tax clearance as soon as possible, and if you need to get it up to date, at least you'll have a little bit of time to do that. So the subsidy rates, EWSS is a flat rate to the employer and based on the employee gross weekly wage. So that's unlike what we saw at the TWSS. So where an employee's weekly gross pay is less than €151.50, there is no subsidy payable. Where the employee's weekly gross pay is between €151.50 and up to €202.99, there is a subsidy of €151.50 per week payable. And then where the employee's weekly gross pay is between €203 and up to €1,462, there is a subsidy of €203 per week payable. And any employee's weekly gross pay over 1,462, there is no subsidy payable. So operating EWSS, as mentioned, the subsidy is based on the employee's gross weekly wage. The gross weekly wage includes notional pay before the deduction of pensions or salary sacrifice, but excludes any DEASP benefits which employees may have mandated to be paid to the employer. So for example, in the maternity or adoptive benefits. Where pay frequency is other than weekly, the employer will calculate the gross weekly wage and divide by the number of insurable weeks to a maximum, and we will issue an update to the guidance around these limits as well. Where the payroll is monthly, if employers are found to manipulate the system by changing pay frequencies, pay dates, or altering amounts to maximise subsidy, they will be liable to recoupment of the subsidy received, together with interest penalties and possible prosecutions. The EWSS is returning to the normal payroll process for PAYE PRSI and deductions, with the payroll being taxed in the live environment. So the EWSS indicator will not be the J9 as was the case for TWSS. It will go back to the normal class using the other payments field on the payroll submission with a value between 0 and 1 to indicate the subsidy request, and this will not appear on the employee payslip. Payroll submissions are to be made to Revenue by the return filing date of the relevant month, so that's the 14th of the following month. And where there are multiple employments, each eligible employer makes a claim for the subsidy in their own right for the eligible employee. And now just moving on to my last slide, so safeguards and compliance. The Act includes a specific anti-avoidance provision which seeks to counteract contrived situations where the gross pay due to an employee is deferred, suspended, increased or decreased with a view to securing the wage subsidy, or in situations where an employee is laid off and removed from the payroll and replaced with 2 or more employees in relation for whom the subsidy would be available. So if revenue identify any such cases, the employer will be treated as having never been eligible for the scheme and will be required to repay subsidy monies and PRSI credits received in full, together with interest, and may face possible penalties and prosecution. Employers should retain all evidence and supporting documentation of their operation of EWSS, as compliance check will be undertaken, and there will be compliance checks on a percentage of employers operating EWSS on a random or risk basis. So that brings me to the end of the presentation. Thank you very much for listening. And as mentioned, there is a guidance document available on our website for EWSS, and it will be updated very regularly. So thank you very much, and I'll hand you back over to Alwyn now. Thank you.
Thanks a million, Siobhan. So we've got a lot of questions in there. Thanks so much for a great presentation. I think it provides a great overview of the scheme and the transition points. I'm just going to take the questions coming into the Q&A. We've got quite a few here. The first one I think may have been dealt with in the presentation, but I'll just put it back out there perhaps in case there's a further clarification required, which is have revenue given further guidelines on proprietary directors. So I think that has come up in Siobhan's presentation, but if there's anything further that you want to cover on that, perhaps.
Hi, Alwyn Andrelay here. I'll take the questions on EWSS. Yes, this morning there was a press release issued just on proprietary directors, so there will be media coverage on it later on today. The guidance which are due to issue later this week will also include details on it, but basically proprietary directors are included for EWSS if they were on the books and paid by the relevant entity in the period from the 1st of July to the 30th of June 2020.
That's great. Another question here, and I'm just going to go through them briefly, but with regards to TWSS, all staff in our building had a difference in their net pay with the scheme. It was lower than normal. Did anyone else have this issue while on that scheme? So that, I suppose, maybe generally for anybody on the call who wants to respond to that. Garrod, I'm not sure if you want to come in there.
Garrod,
I'll take that one and just make sure my microphone's up. Yeah. The whole basis of the temporary wage subsidy scheme was to provide incomes as quickly as possible to people who were still being kept on the payroll. And what we did there in those circumstances, we did what we call the ARNWP, the average revenue net weekly pay, which is basically what the person was receiving in January and February of the year. Bearing in mind, it was meant to be initially not more than a 12-week subsidy. It turns out to be close to an almost 6-month subsidy scheme. On that basis, we were providing a subsidy, and the employer could give an additional gross payment to bring that person close to, as possible, their net weekly pay they would have got in January and February, as per the information that had already been submitted to revenue in payroll submissions under the PAYE system. So we were never going to actually achieve full net pay that was normally paid, but we would be close to it. The way the system originally worked out was we had subsidy, we had additional gross pay, and also we had tax refunds being generated that brought people up to and equal to, in many cases, their net weekly pay. Where that didn't work out, it was normally where it was just below it, and we recognise that. Now, since then, we put people in June, we put people on week 1. That was the scheme had been further extended to today. So in order to sort of maintain some sort of credibility, or to reduce further liabilities from a taxation perspective, we stopped the tax refunds being generated from June. So that would reduce the net take-home pay of people who were on the scheme. That was so that there would be some credits available for the end-of-year calculations when we do those tax liability checks.
Okay, thanks for that, Garrod. Hopefully a straightforward one here. Do we have to split this week into 1 day TWSS and 4 days EWSS?
Okay, I can take that again.
Sorry,
the test for whether you can claim EWSS or TWSS depends on the payment date. So if your wages are paid anytime on or after the 1st of September, then you claim EWSS. If the wages are paid on or before the 31st of August, you claim TWSS. And it's based on payment date, it's not based on earn date, so there's no requirement for people to split their payroll into the bit, pre and post 1st of September.
Okay. One of the things that I think has come up quite a bit here is around grants and grant income. So we have one question here, which is, I understand that grants count as income turnover when making the 30% reduction in trading calculation to be eligible for EWSS. I'm concerned that with the organisation in question being in receipt of stabilisation funding from the Arts Council, this will disqualify the company from receiving EWSS. The stabilisation application was based on including the EWSS into the calculation.
Okay. Yeah, I'm aware that there's been a lot of questions raised around the eligibility criteria and how do you measure turnover. Now, it's very difficult because every organisation is structured differently and its funding is different, and the grants that come, some are linked to expenditure, more are linked to the running of festivals, etc. So it's really, really difficult to give a one-size-fits-all response to that. Basically, the treatment of grants and public funding, it depends on the nature of the grant and the nature of the funding. There are generally accepted accounting principles and company legislation which dictate what is included in turnover and how turnover is accounted for and when it's accounted for. So you really need to look at the structure of your organisation, what the grant is linked to and how it's accounted for in turnover when you're preparing your financial statements, and that's how you determine whether you need the 30% reduction in turnover or not. Now, some people have also asked questions around the 30% reduction in orders and whether bookings from a booking office are deemed to be your orders, and in effect they really are your orders. I mean, if you don't have people, that would be now for entities who are running festivals or anything where people have to buy tickets, then if there's a reduction in the orders, they'd be counted as the reduction in your tickets that are purchased.
Okay, we just had a question there which I can answer. Yes, the session is being recorded and it will be circulated. So yeah, there's a lot of questions that are coming in around the receipt of grant funding and so on. I'm just going to try and pick up on here. We are getting lots of questions in, and I'm conscious we have a time limit here, so we'll get to as many as we can, folks. One here, if capital grant comes in during one of the months, but income in box office hires is still down by 100%, will this result in the centre not being able to claim for this month, as turnover will be up on the same month last year?
The turnover and the order test is a 6-month test, so you don't look at each month separately. You actually look at the full period from July to December 2020, and you compare that to the period from July to December 2019. And it's because it's the 6-month complete and you're looking at it now at the end of August. That's why we ask people to do the rolling review every month. So at the end of August, you expect the results to be a particular way. At the end of September, you need to reassess your turnover and orders based on what has happened up to the end of September, just to make sure that the projections that you relied on when you originally made the application, that they're still valid. And if it turns out that things are better than what you initially anticipated, so your turnover or orders won't be down 30%, you need to deregister. So it's not a month-on-month test, it's a cumulative test that needs to be undertaken. Yeah. That question in relation to capital grants, again, you're back to how those grants will be treated in your financial statements in the normal course of events. Generally, capital grants are not included as part of turnover, but again, it's very difficult to give a one-size-fits-all response, particularly in relation to grants and any type of public funding, because the conditions attaching to them are very different depending on who they're given to or where they're sourced from. Yeah.
I'm just trying to scan down through the questions. I know some people are replying to one another on here as well. Let's just see one here from Anna Walsh. Sorry, Anna, I see you've sent a couple of messages in there. 30% reduction in income when Arts Council and local authority awards are treated as income. Arts Council and local authority strategic funding awards are annual ones paid but paid out intermittently. Arts centres typically divide their total award by 12 and allocate the amount to each month. So to avoid erratic eligibility, the sensible income test would be whether the average monthly July to December grant income is down compared to the same period last year. Is this correct? Is that the correct interpretation, I think, is what's being asked there?
Again, like I say, it's difficult to actually answer that without seeing the conditions attaching to the grant. So I would just, like, everybody does need to prepare financial statements for filing with the CRO, particularly if you're a company. So I think you just need to have a consultation with your advisors and your financial controllers, and they'll tell you how stuff is treated for turnover, you know, for revenue recognition purposes, and that'll dictate what's included in your turnover.
Yeah. One question here. We have 2 staff members earning less than 120 a week. We will be unable to keep these employees on as we will receive no subsidy now for these employees. However, we do have an extra 30 hours in cleaning. So I presume it is okay to increase these employees' hours instead of letting them go.
Absolutely. If you increase the hours, yeah, you can claim subsidy in respect to them. There's no requirement that, you know, you need to be doing the same work. Otherwise, it's just you look at what someone is actually paid, and if the hours are increased, then that's great for the individual employees. And once it goes over the 150, you'll be eligible for the subsidy.
Yeah. Thanks, Anne. Again, sorry, there's probably going to be a little bit of repetition here, but just one from earlier on this morning. Should the eligibility calculation 30% reduction on prior year be calculated on an accruals or cash receipts basis?
Again, it's back to your normal revenue recognition rules and your turnover test being dictated by the accounting standards and company legislation.
Okay, and there's a question here from Siobhan's presentation, which did Siobhan say that week 1 will continue to apply to year end for employees that were on TWSS, even if the company is now applying for EWSS?
Carol, do you want to take
Yes,
this one?
Siobhan should have said that, yes. Yeah. Can you hear me?
Yep, we can indeed,
yeah. Yeah, sorry, that's great. No, in fact, yeah, those who are on week 1, who've been placed on week 1, were placed on week 1 because they either received a temporary wage subsidy amount in the non-taxable area, but still liable for the end of the year. And anyone who is also on pandemic unemployment payment is also being placed on week 1. So revenue will continue to keep those employees on week 1 until the end of the year. There may be certain very exceptional circumstances where people can come back to us and ask us to put them back on cumulative, but they will suffer hardship, we figure. So we're very reluctant to move people from week 1 to cumulative for the moment.
Okay. A question just come in here now. Can employees who are due a wage increase from a grant specifically for that purpose from September 1st receive that increase?
So the question is whether they're entitled to receive the increases at all, Lynn?
Yeah, it just says, can employees who are due a wage increase from a grant specifically for that purpose from September 1st receive that increase?
Yeah, the employment wage subsidy scheme doesn't cut across any legal obligations around wages that employees are entitled to. So that really is something to be decided separate to the EWSS eligibility and the claim. Now, one of the major differences between the temporary wage subsidy scheme and the employment wage subsidy scheme is that the temporary wage subsidy scheme was a subsidy to the employees, whereas this is a subsidy to the employer. So any like the rules around whether the employer is entitled to it or not is solely just looking at the employer and what the employee is in receipt of maybe outside of their employment is irrelevant. It's you just look and see what the employer actually pays to the employee. I know we've had queries from other webinars where people are asking if the employee is in receipt of short-term working benefit, would that impact on the eligibility or the ability to claim the subsidy? And it isn't. Basically, you just look and see what you as an employer are paying to the employee, and that dictates how much you can claim for them.
Okay. Another one here that I think it touches on an earlier question, but just to mention it because it talks about VAT as well. Our compliance checks as follows: TWSS January to July 2020 as a whole, EWSS month-on-month checks August to February 2021, and should VAT returns be factored into income for the month-on-month review?
Okay, there's a couple of things there. The compliance checks are in relation to the temporary wage subsidy scheme, and they're looking at how the temporary wage subsidy scheme was run to ensure that it was actually operated correctly. And that looks at the eligibility for TWSS, which looks at Q2. The month-on-month review is something that employers need to undertake themselves, and it's not part of Revenue's compliance check. The supporting documentation that employers rely on to ensure they are eligible for the scheme and that they continue eligible for the scheme, which is the monthly review that's done every month. That documentation needs to be retained in case an EWSS compliance campaign commences later. And the third element around the VAT returns, again, you're back to the turnover and the quantum of the turnover being dictated by GAP and company law legislation rather than solely on your VAT returns.
Okay, some questions just coming in now. We've one here. As we have an obligation to pay back the amount our staff were down during TWSS in their net pay, can this repayment be done while we are on the EWSS?
Gro, do you want to talk about an obligation to pay
Yeah,
back what people didn't get during TWSS?
In this case, I caution what is happening here. If a company or an employer has starts to pay back incomes that were not paid during the TWS period and while they were receiving TWS, during our compliance program, we, from a risk basis, we would be interested to know where that funding came from, how they did that. For the simple reason is the eligibility of the temporary wage subsidy scheme was based on people not being able to pay the funds to their employees, and if they start now, if those funds were deferred or that those payments were deferred for a later period, it would make the payments that they made under the TWS somewhat under our microscope a little bit as to why they were made deferment, and maybe not their eligibility under the TWS may be questionable. So I'd be just note of caution there on that one.
Okay. One question, two coming in right beside one another here, the same person. The monthly EWSS eligibility check is based on previous month 30% test versus the same month last year. And yep, sorry, go on ahead, Anne.
Yeah, the EWSS is based on the 6 months from July to December 2020. So it's not month on month. You actually look at the full 6 months together. And at the end of every month, you again look at the full 6 months together. But because as time rolls on, you have more of the actual results. So like at the end of October, you'll be looking at July, August, September and October, what has actually happened, which will inform your projections for November and December. And it's the total of what has actually happened up to the end of October plus your projections for November and December. You add them together and you compare them with the results for July to December 2019.
Okay, and the same person has asked, is it just Q2 2020 for TWSS compliance check, not the first few weeks of March?
Yeah, there was
temporary wage
Sorry, Claude.
Sorry, no, the temporary wage subsidy scheme was for Q2 to check eligibility, not compliance so much, but their eligibility would have been based on Q2 turnover and economic conditions there, rather than the expanded one for the employment wage subsidy scheme.
Okay. Question in here, can casual employees move between bands from week to week depending on hours worked?
Absolutely. We expect that will happen in certain instances, particularly where the people are, like you say, temporary or you know, working different hours every week. It just depends, again, like I say, on how much they're paid as to what the subsidy they claim, the employer can claim in respect to them actually is.
Yeah. Picking up on an earlier question, can you advise about how grants from the Arts Council and local authority are assessed in terms of turnover each month? Usually payment of a quarter of our grants are paid in each installation. Can we apportion annual grant instalments received per each month it is received for, and not just for the month it is paid?
Yeah, unfortunately, again, I have to say, because we don't have the full details of the grants and the conditions surrounding it, as to how they, you know, how they should be treated, and there are accounting standards and company legislation that dictate how they are treated for your accounting purposes. So I would just say you need to actually look and see how they're treated for your accounting purposes, and that'll dictate whether they're included in your turnover test or not.
Okay. Question here from earlier on this morning. If grant income is linked to specific payroll expenditure, I think we've touched on this already, but just worth picking it up again, e.g. partial or full cover of staff members' salary, but the organisation meets the overall test across 6 months, is the organisation still eligible?
I presume they're eligible because they've taken the 30% reduction in turnover. And yes, then if they're eligible on turnover, that's the only test. There's no employee eligibility test other than their wage limit.
Okay. I'm going to pick up one question here from earlier on. Is it correct that project or other income such as Creative Ireland funding should be applied to the time of the activity specified in the application, rather than the time of receiving the payment and the relevant paperwork made available to revenue if required?
Again, that's all back into when do you actually recognise grant income in your turnover. And again, that's something that you'll need to go to your professional advisors on, your accountants on, and determine it with them. Yeah.
Are there any of the points that we've mentioned already today that you'd like to pick up yourselves, folks? Just, I'm conscious I'm firing questions at you here. Are there any?
No, that's fine.
Is that okay?
Yeah, I think I really would encourage people just to start engaging with the registration and the tax clearance process now, sooner rather than later. Some people are monthly, paying their employees at the end of the month. Don't wait until the day before you actually pay your employees to try and register, just in case there are some tax clearance issues that may have to be regularised, because sometimes there are some connected party rules that need to be met. So maybe some of your proprietary directors need to be tax clear as well, and you may not necessarily know if they are or not. So we just encourage people to register and to start that whole registration and tax clearance process sooner, rather than just waiting until a day or two before they actually need to make the wage payment and make the EWSS claim in respect to the employees.
Yeah, good point. Be prepared.
And from my perspective,
sorry, go Rhodes, yes.
Sorry, just from my perspective on the temporary wage subsidy scheme, to ask employers to stop sending in J9 payroll submissions with a J9 PRSI class. They should return to normal payroll with normal deduction of tax and the normal and correct PRSI class.
I might just take, I know we're kind of almost on top of the time now, but I might just take a couple more. We've about 40 odd questions here, and we've gotten through about half of them. So I'll just try and pick up a few more that I think we maybe haven't covered. Employees who are on the PUP and will be starting back mid-September, are they eligible? I'll try that again. Are they eligible from 1st of July, or are only on the EWSS? Did that come through clearly enough?
Yeah,
I think I understand
someone
that,
is on
that
the
question.
Yeah.
Shoot away.
Do you want to take it, Grode?
Oh yeah, no. If somebody's been on the pandemic unemployment payment and is only going back into employment from mid-September, then there'll be no sweep back because they've only started employment. The employer hasn't been paying them. So the employment wage subsidy scheme could be applied to those from when they start employment and come off the PUP.
Okay. Just before we finish up, there's one or two that I might just try and cover. One here. Question is, can we claim for a casual employee that might earn €250 a week 180. I'm not sure if we picked up on this already. 180 the following week, nothing the third week, and 250 the next week, and so on. So I suppose irregularity of the casual employee, can they be claimed for in that kind of way?
Absolutely. You just look and see what you've paid them in the particular week, and that will dictate whether you are entitled to or not entitled to a subsidy and the quantum of the subsidy. There's no requirement for them to be on the payroll every week.
Yeah, okay. I'm just going to see. Yeah, I'm going to take one last question here before we finish. For those of us who received revenue letter this week, is it Q2 figures we respond with?
Oh, if you received a revenue letter this week, it would have been a temporary wage subsidy letter, I presume. Yeah. So it should be a Q2 figure. Yes, it's under temporary wage subsidy. We've been operating and doing a check, just an insurance check.
Okay.
Thank you.
Okay, folks. Well, we're right on top of the time. Thank you so much, Garrod and Siobhan, Laura, for being with us today. We really, really appreciate it. As I said, the questions were coming in quick and fast there, so I think we got to about half of them. But is there, just on that note, is there an email or a link, or is there anywhere you would like us to direct people if they have further queries following today's session?
Yeah, there are guidelines on Revenue's website, and as Siobhan said during her presentation, a second version of them will be going up later on this week. So I would just encourage people just to keep reviewing the Revenue website. There was a new version of the frequently asked questions on the temporary wage subsidy scheme as well, issued late last week. So again, just keep looking at the revenue.ie website and you'll see updates there.
Great. Okay, folks. Well, thank you all so much again for your time, and thanks to everybody who took part today and for your questions, and again to Garrod and Laura and Siobhan for being so available to us today and giving your time. We really, really appreciate it. As I said, this session has been recorded and we will be able to share it shortly over the next few days, or in the next week anyway at the latest. So stay tuned to the Arts Council social media and website for more information on that. Thanks so much, folks.
Thank you very much.
Thank you.
Bye-bye.